her principal residence. Now, there's no indication that Kugler's done anything improper, nor that she realized any undue financial gain here. Kugler's situation differs significantly from Cook's in that the records here don't include mortgage loan applications, only tax records and federal disclosure reports. In a statement to CNBC provided by a person authorized to speak on her behalf, Kugler said, "My primary residence has always been listed in my financial disclosure, and this residence has never been rented. We filed a change of address in July of 2021 with Montgomery County after we moved to this residence, but it appears that Montgomery County failed to update it in its records. We are advised that Montgomery County is in the process of correcting their records to reflect the 2021 change of address request." Now, a spokesperson for Montgomery County said to me today that the county does not have the ability or authority to change a property owner's status. That's handled by the Maryland Department of Assessments and Taxation. Now, what's striking here, Leslie, is that the inconsistency in Kugler's records here is over precisely the same issue, primary residence status, that Trump is using to try to force Cook off the board. And Kugler is declining to answer our questions about why she resigned or whether anyone pressured her to do so. Back over to you.
Yeah, that's fantastic reporting there, Eamon. What comes next at this point in time?
Well, what we know is that Kugler has not yet filed her 2025 financial disclosure. The rest of the members of the board have done that. Kugler's going to have to file that filing, as well as another document which lists all of her disclosures year to date for 2025. In addition to the 2025 filing that covers 2024. We're expecting that she will file that, although it's been extended, the deadline here, that she will file that this month. So we may learn more about her holdings and her real estate in that document. That she will file that.
Fantastic work. We know you'll be all over it when that filing drops. Eamon, thank you so much. And you can read more of Eamon's exclusive reporting right now on CNBC.com. Up next, Broadcom's big bounce. That stock hitting all-time highs today, up nearly 10%. We'll speak with top chip analyst and a shareholder. Closing bell. We'll be right back.
of CNBC.
Welcome back. Shares of Broadcom soaring to a record high on blowout earnings and revealing it secured $10 billion in new orders for custom chips from a customer. Joining me now is top chip analyst Bernstein Stacey Raskin and Broadcom shareholder Blue Line Capital's Bill Baruch. Thank you both for being here. Stacey, there are, reports out there that it's OpenAI that's working with Broadcom to develop a custom AI chip. What do you see as the implications of that?
Yeah, by the way, it's been speculated that it's OpenAI. It's plausible. Whoever this is moving very, very quickly. Seems to sort of fit with their persona. No, this is really important. You have to remember, Broadcom had 3 customers that were shipping these AI chips. It was Google and Meta and ByteDance. They had 4 others that were prospects. So one of those prospects, this one, is now converted into a customer. And it is a tremendous amount of revenue. They said $10 billion next year, which is a very fast ramp relative to anything we've seen before. And they're implicitly guiding, effectively their AI revenues next year well over $40 billion. It was like $30 billion as of last quarter. And I don't know that it stops in 26 either. They sounded fairly positive that it would continue into the years beyond. And so, frankly, it starts to remind me a little bit of the revenue ramp we started to see for NVIDIA like several years ago when this really started to kick off. And if you think that those numbers are anywhere plausible, all of a sudden, the earnings power of this company starts to go up very, very strongly. And, the stock has been fairly expensive, but, it starts to realize maybe it's not as expensive if you actually think the earnings prospects are as strong as maybe they are suggesting. And so I'm actually not surprised that it's up as much as it is today. And I don't know that the story at this point is done.
Yeah. And on the flip side, you've got NVIDIA down potentially a bit on this idea of diversification of the supply chain. Stacey, I'm just curious whether you think NVIDIA has some real competition and whether its share is seriously threatened at this point.
Look, so the whole GPU versus ASIC debate goes back and forth, right? And right now, the narrative, at least today, is clearly shifting toward Broadcom. They do go back and forth. I actually don't think that the right question right now is necessarily who's winning or losing. I actually think personally the question is better off to be put, is the opportunity in front of us still large or is it not? Right. I think ASICs will take share. They're coming from a smaller base. I don't think they dominate. And I think if the opportunity in front of us is still big, if we're still early in this, as I think we are, I think they can both thrive. Because think about it this way. If the opportunity in front of us is not still big, they're both screwed.
Right.
So that's the right question right now. I think not as much who is winning or losing. But in the heat of the moment, clearly that narrative today is going to shift more toward Broadcom. We're in that phase of the cycle.
Well, let's ask Bill that question about the rising tide lifting all boats and potentially the tide washing out there. Bill, you're a shareholder of both NVIDIA and Broadcom. What do you do with today's developments?
I don't think that they're going to compete against each other and one would harm the other. I think that what you're seeing here is the multiple, the high multiple in Broadcom. You're paying for this flexibility. They helped Google or Alphabet ramp up the TPU. And now, although that relationship has changed, the flexibility here in helping OpenAI potentially ramp up what could be the XPU, an inference chip. And I think that pivot allows, takes some pressure off the lack of GPU chips that are on demand for NVIDIA. Now, we don't look at this as there's a one winner. We own both. Although currently we're a little underweight NVIDIA to the S&P, and we're quite a bit overweight Broadcom to the S&P. I think there's a lot of runway here, and I do agree with Stacey that this does remind me of what we saw in 23, where the revenue growth, the ramp up that's coming next year in 2026 for Broadcom. It reminds me of NVIDIA. We're seeing 60% revenue increase forecast for 26, but let's not forget you have the software infrastructure, and that's still nearly a 50% revenue forecast increase too. So you got the diversified revenue streams, and we love Broadcom. I'm a little patient here. We wouldn't be chasing it. I do want to increase. We trimmed it recently just because we were so overweight. I would be looking for a pullback, somewhere, at least the 315, 312 area, but we could get a move to 300 if the broader market kind of softens a bit.
Yeah. So what does this say then, Bill, about the amount of gas left in the tank for the AI uptrend? It sounds like neither of you really believe that, there's much of a slowdown as was feared a week or two ago.
I mean, this is the early innings. I mean, I think you're starting to see it right now. I mean, look how the market itself, broadly, with the Nasdaq. I mean, it's continued to run, and I mean, not only that, you're starting to see green shoots within the economic data. Look at the non-farm productivity yesterday. That could really be tied to starting to see AI being implemented. I'm also, hearing that, from a Mag 7 company, that you're starting to see some of the lower echelon employees being forced to work on these AI workflows. I think down the road you're going to see a lot of those jobs being taken over by AI, and they are essentially training AI right now. So there's going to be a lot of haves and have-nots within the market and who's going to benefit from it. But right now it's an AI arms race. The spend has to come in, and these companies, the market is appreciating, and it's giving way to the spend. It's increasing the market itself. So I think there's a lot of runway here, and I'm excited to see how this year finishes, but really 2026 could be a tremendous year.
Yeah, and the spend continues to be eye-popping. Broadcom up about 10% today. NVIDIA down about 3%. Stacey and Bill, thank you very much for being here this Friday. We are getting some news on Anthropic. Mackenzie Sagalos is that for us. Hey, Mac.
Hey, Leslie. So there is a new filing in the class action lawsuit against Anthropic. They are going to pay $1.5 billion to settle a copyright case that was brought by authors who said that the AI startup downloaded millions of pirated books. Now, the company had faced the risk of more than $1 trillion in damages if they didn't settle. A San Francisco judge does still need to approve the deal. Anthropic's deputy general counsel telling me in a statement that this case established a key legal precedent, saying that in June, the district court issued a landmark ruling on AI development and copyright law, finding that Anthropic's approach to training AI models constitute fair use. Now, that is a big win for the AI industry, Leslie.
It's a pretty large amount for a 4-year-old company there. Mackenzie, thanks for staying on top of that for us. Mackenzie Sagalos. Up next, your retail rundown. We'll hear from top analyst Brian Nagel with how he's navigating the sector, including that big drop we are seeing in Lululemon stock today, currently down about 18.5%. Closing bell will be right back.
today.
Welcome back. Shares of Lululemon getting slammed after cutting its outlook as tariffs take a bite from profit. Joining me now after downgrading the stock and removing his price target altogether is Oppenheimer's Brian Nagel. Brian, thank you for being here. Why downgrade just to perform? Why not underperform if you're removing the price target with the stock in free fall today?
Well, look, I mean, it's a good question. The point when I've been talking to our clients all day on this, look, Lulu has hit a speed bump, right? There's merchandising issues at the company. I think management is now more aware of this. They're turning more aggressive in their efforts to fix the problem. But this is still Lululemon. I mean, this is a real brand. And you look over any length of time, I think there will be a recovery here. So our message to clients is step to the sidelines now, but very much keep an eye on Lululemon, because we do believe that at some juncture, there will be a forthcoming recovery. And, that could be as early as 2026 when they start to reset this product.
So that was going to be my next question is what do you think needs to happen to have that recovery in place? One thing that Sarah Eisen asked CEO Calvin McDonald about was the longtime absence of having a creative director in place. Now Lulu has named Jonathan Chung to that role. Did that set the company back? And now that they have someone who can kind of create that creative vision for the company and make sure that it's appeasing to its brand and all of that, does that help Lulu really turn things around, or does it require more than that?
No, look, I think that's a significant first step. Okay, so to answer your question, in my mind, again, it's easy for an analyst to sit here and say what the problem is, right? I mean, I'm from the cheap seats, if I will. But I mean, the issue is merchandising. And, I spend a lot of time in Lululemon stores. I know a lot of their customers really well. And the product, as great as it is, has gotten stale. What's interesting, if you look at, how Lululemon's performing right now, international markets continue to perform very well. For instance, China, it's still a relatively new brand. But in these more mature markets like the United States, where Lululemon's been around for a while, their core customer has a collection of product. They need to introduce more new, more innovative product. And that's what's been missing. And I think, look, and this is not, I follow a number of companies within the space, including Nike, Under Armour, and others. This is not unique to Lululemon. There was very much a lack of innovation post-pandemic. These companies, I think they were disrupted. They got in kind of the mode that their products were selling well without innovation, and now the rubber's hitting the road. Okay, but what you need to see from Lululemon is more fresh product, and that will come. It's just going to take time.
Yeah. And then, of course, there's the question of price elasticity given the tariffs and all the competition out there. Can they afford to meaningfully raise prices in this environment? I know Jim Cramer was talking this morning about just competition from Costco, which is tremendous there.
Look, that's a $64,000 question right now, okay? And, just stepping back from Lululemon for a moment, I think one of the reasons the stock is performing as weak as it is the market's basically saying, and I think correctly, that here's a turnaround for all intents and purposes happening in what is becoming an increasingly difficult, precarious, if you will, consumer spending backdrop. And exactly the point you're making, Leslie, I mean, you're seeing a lot of companies, and I think we're early in this, but we're seeing a lot of companies start to raise prices. And I mean, my work and the work my team and I do on the U.S. consumer, what we're basically seeing clearer evidence that as 25 progresses, as we move into the holiday season, there's going to be a lot of companies simultaneously raising prices. And that action, could crowd out discretionary spending. So a company like Lululemon, which is a discretionary product, are already suffering from some internal issues. That's another big pressure. And they're going to have to really question to what extent they can raise prices, particularly on legacy items. Now, if they start introducing new products, that gives them a little leeway, if you will, to raise prices. But these legacy products could be more difficult.
Yeah, $120 Lego leggings in competition with some pretty good dupes on Amazon and Costco. It's tough competition out there. Brian, appreciate you breaking it down for us. Brian Nagel of Oppenheimer. Thank you. Up next, we are tracking the biggest movers as we head into the closing bell. We'll be right back.
for what's ahead.
9 minutes until the closing bell. Let's send it over to Christina Partsinevelos for a look at the key stocks to watch. Christina.
I need to start with Tesla because those shares are on the rise, up 3% after revealing a massive new pay package for its CEO, Elon Musk. The board is asking investors to approve a total package worth about $975 billion as a maximum payout. That's almost $1 trillion. The full award would give Musk more than 423 million additional shares and would nearly triple his already staggering net worth. You can see Tesla up 3%. Samsara's stock soaring more than 16% after the company reported second quarter earnings and revenue that beat expectation. The dash cam and GPS maker also boosting its outlook, and that's contributing to shares climbing higher. Samsara's CEO will join Closing Bell Overtime next hour for an exclusive interview to talk earnings and, of course, much, much more. And last but not least, one more name, DocuSign, known for, of course, e-signatures, is also an earnings winner today after better than expected results and a strong outlook. The company said its largest customers are definitely contributing to growth. Shares are up over 5%. Leslie?
Yeah, big day for movers. Christina, thanks so much. Christina Partsinevelos. Up next, we'll run you through the big move in rates following today's jobs number and what it might mean for the housing space. That and much more when we take you inside the market zone. We are now in the closing bell market zone. CNBC senior markets commentator Mike Santoli is here to break down the crucial moments of the trading day. Plus, Diana Olick here with more on the big move in mortgage rates. And Steve Kovac standing by with Roblox's new AI bet. Diana, let's start with you. You're following mortgage rates. We've seen some moves this week in particular in the Treasury markets.
That's right, Leslie. And today we haven't seen a one-day drop this big since August 1st of last year, when we got a similarly weak jobs report along with weak tech earnings. And of course, that is making the builder stocks very happy today. Names like Lennar, D.R. Horton, and Pulte all up between 2 and 3% on the day. And the home building ETF, ITB, it's been running hot for a month now as rates move slowly lower, now up close to 13% on the month. And again, all because the average rate on the 30-year fix dropped 16 basis points this morning to 6.29%, according to Mortgage News Daily. That is the lowest rate since October 3rd of last year. Many lenders are priced better than this at rates of 6.125%, and many will be quoting in the high fives today. That, according to Mortgage News Daily's Matt Graham. It's a major difference from May, when we saw that rate over 7%. The big question now is, will this be enough to really get home buyers back into the market? Leslie?
Yeah, it seems like that unlock at least has the equity investors happy in some of those home builder names. Diana, thank you. Steve, tell us about what's going on with Roblox.
What's going on with Roblox? Artificial intelligence. I'm here in San Jose, California at the convention center here. This is Roblox's annual developers conference. Slew of new features announced. I'll stick to the AI stuff to keep it simple here. We have this new, what they're calling 4D AI, which lets you generate items within the game that you can sell. Usually there's a lot of work that goes into making these virtual items. This makes it easy to do with the prompt, just like you generate an image in ChatGPT, for example. Also a real-time translation tool that when you use chat, you can speak to someone in English and German or whatever, what have you, and it'll do the translation automatically. And some new safety features. That's always an overhang when we talk about this name. Lots of work still to be done there, but they did announce this week a new age verification feature that you take a selfie with, and it can estimate a user's age based on that, and then base the experiences on that person's age. By the way, Leslie, I have CEO Dave Baszucki of Roblox coming up next hour in an exclusive interview here on Closing Bell Overtime. That's at 4:15. You're not going to want to miss that. We have a ton to go over with him. Leslie, I'll send it back to you.
Excellent, Steve. Thank you. Looking forward to that. Mike Santoli, let's give you the last word of this very interesting trading day.
It has been, Leslie, I would say overall a pretty nuanced and measured response to what could have been a pretty profound disappointment on the jobs front. I think that there was enough within the jobs report to pull people away from the idea that it's absolutely this pre-recessionary trend over the last 3 and 4 months. So you have more stocks up than down. You have small caps trying to rally. You talked about the rate-sensitive names going up. Against that, the big banks did suffer. Consumer cyclicals are registering a little more maybe doubt about whether the consumer can hang in there. Overall, market has stayed on trend. We haven't had even more than a 3% pullback in the S&P 500 in over 4 months.
Yeah, no, it's a great point. The questions about the lower-end consumer are definitely front and center. And the higher-end consumer, given what we saw with Lululemon today, the outperformance, as Mike mentioned, real estate, communication services, and materials. That does it for Closing Bell. Let's send it to Overtime with Morgan Brennan and
Well, that's standard regulation. The free markets ETF ringing the Closing Bell at the New York Stock Exchange. Fennec Pharmaceuticals doing the honors at the NASDAQ. Stocks closing, well, looks like we're closing maybe mixed here on the day on that weaker than expected jobs report. The NASDAQ 100 at least closing in the green, everything else in the red. We're off the worst levels of the day. The Dow, the S&P 500, and the NASDAQ all did hit record highs earlier this morning in the session before turning negative. For the week, the Dow down slightly, the S&P up slightly, and the NASDAQ the big winner with a gain of more than 1%. We saw big drops in bond yields today on this jobs report, that adding to the Treasury rally that we've seen really all week. The 10-year yield just above 4%, the lowest level since early April. That led to a big drop in mortgage rates, the biggest one-day drop in more than a year, actually. 30-year fixed now at 6.29%, according to Mortgage News Daily. It's the lowest level in nearly a year. All of this helping to catapult gold to another record high, the 30th of the year. It's posted its best week since late May as well.
Wow, that's the scorecard on Wall Street, but winners stay late. Welcome to Closing Bell Overtime. I'm John Ford alongside Morgan Brennan. Ahead, we're discussing and dissecting why today's early rally faded. Are markets more concerned about the strength of the economy? Are those worries even a rate cut can't soothe?
And we will also speak to the CEO of Roblox about his company's new AI push. Also about the seemingly never-ending controversy about how to protect children on the platform.
And shares of Samsara jumping after posting strong results, raising guidance. The company's CEO, Sanjit Biswas, also joining us coming up in Overtime. Let's begin, though, with the markets and the big moves we saw today. First, hitting new highs before falling from those levels. Christina Partsinevelos joins us from the NASDAQ. Christina.
Well, markets really struggled to find that Goldilocks scenario today. A weaker than expected jobs report, though there were some positives like real wage growth remained positive. Initially weighed on trading, but we did see a little bit of a turnaround just in the last hour or so, helping the NASDAQ as an example, with the case for a September rate cut just continuing to build. And that rate cut optimism sent the real estate sector soaring to sector-leading gains. You had the logic. The logic is pretty straightforward. Lower rates boost home demand and drive up property prices, and that's why you saw some construction giants capitalize with Lennar, DR Horton, Pulte Group, all closing on, you can see on your screen, over 2% higher. Now let's switch to the AI trade because it delivered drama on both sides today. Broadcom hit an all-time high. It surged, closing over 9% higher on strength across its VMware software business and growing AI custom chip backlog. But the main driver for Broadcom is landing OpenAI as a new $10 billion customer. And this reignites the custom chips versus NVIDIA GPU debate. Is the AI pie expanding enough for both players and a few more players, or is Broadcom stealing NVIDIA's lunch? NVIDIA closed lower, you can see almost 3% lower, suggesting investors maybe are picking sides today, possibly profit taking. NVIDIA wasn't alone in the penalty box. AMD dropped about almost 7% today after Seaport Research downgraded the stock, citing concerns about the chipmaker's AI business momentum. Bottom line, though, rate cut hopes are definitely reshaping sector rotation within the markets, but the AI chip wars are far from being settled. Guys?
Okay, Christina Partsinevelos, thank you. We saw huge moves in bond yields today, too, following that weaker than expected jobs report. So let's get to Rick Santelli in Chicago for more. Hi, Rick.
Hi, indeed. What a big move. But I'll tell you what, on closer inspection, there's certain metrics in what is a weak jobs report that, based on history, aren't as bad as they may appear. Let's look at year-over-year average hourly earnings. Came in at 3.7%, down from 3.9. This chart goes a year pre-COVID. Look at the left side, look at the right side. The left side is lower, which means we're between 3.0 and 3.5% for average hourly earnings on a year-over-year basis pre-COVID. It's more of a normalization based on history. And if you look at the unemployment rate at 4.3, indeed, it's the highest it's been since October of 2021. However, if you look towards history, it's still relatively tame. So we want to be very careful. Weak jobs report might not mean the economy is going to act horribly in the future. Now, let's look at a two-year note yield. Right now, as it sits, it's down 10 basis points on the week. Any close in yield below 3.54% would represent a three-year low yield close. And if you look at 10s, they just can't get below this kind of 4% area. Right now, we're hovering at a 5-month low yield close. And once again, this 4%, basically the low close of the year, it's an important metric from early April, and we like double bottoms in this series in the 10-year. So look for potentially it to hold if we close above 415 before we close below 4%. And finally, the dollar index. One would think it would be following the 2-year and really moving back again towards multi-year lows, but it's avoided it. It had multi-year lows in early July. As you can see on this chart, even though it's down, it's still above those levels. John, back to you.
Rick Santelli, thank you. Now let's get into this jobs report. About 2/3 of the major categories saw negative job growth, including government job losses of 16,000, professional and business services of 17,000. Revisions also painted a gloomy picture with non-farm payrolls for June and July down by a combined 21,000. Well, joining us now is Diane Swank, KPMG chief economist. Diane, the markets are near record highs, but on the labor front, things may be stalling out. How dire a sign is this?
Well, we're still at very low unemployment rates, but what I worry about is under the hood. What we're seeing is a lot of inequality, and the economic aggregates are masking that inequality. The stress unemployment rate, that includes people working part-time instead of being able to find full-time jobs, those marginalized workers that are discouraged out there, that unemployment rate went to 8.1%, its highest rate since late 2021. We also saw the ranks of the long-term unemployed. People moved from 15 to 26 weeks into 27 weeks or longer. Those ballooned to the highest levels since 2021 as well. And so that underlying weakness in the labor market, it really shows a labor market which is consistent with what we've seen in a lot of private sector data as well, one that is freezing up a bit, where those workers who have a job are frozen in place and those workers who want a job are frozen out.
Diane, so what does that mean we look for next to signal the impacts on the market and the longer-term direction of the economy? And my impression has been for the last couple of years, the solid jobs picture has propped up stretched credit. It's propped up rising rents. Consumers have been able to sort of get by, but these numbers concern me in the sense that maybe that period of labor backing up everything else could be drawing to a close.
Well, that certainly is the concern of doves at the Fed and some at the Federal Reserve. We will see a rate cut. The question is, will it be enough for us to not see a descent? And we could see descents in two directions, because there is a concern out there that given the fact that we've not tamed the inflation that's gone on for more than 4 years now fully from the pandemic, at the same time that we have a tariff-induced bump in prices that is not just a one-time bump but sequential because of the way that tariffs were rolled out, that has sort of really split the Federal Reserve. So you've got doves arguing for at least a 0.5% or more cut at the next meeting, and hawks on the other side of it, likely to dissent for no cut whatsoever. And it really is a hard situation. It's one thing for the Federal Reserve to forecast a mild bout of stagflation, which they have since tariffs have come into the mix. It's another thing to live it in real time.
So would it be safe to say, as the market is pricing in, that a 25 basis point cut is basically a foregone conclusion for the rest of this month? And if so, how much now hinges on something like CPI, the inflation data we get next week? We get more labor data revisions next week as well. What would it take to constitute a larger cut and or more cuts behind this one?
Well, we do expect 3 cuts by the end of the year now, but I think to get a larger than a quarter point cut, you'd have to see a much cooler CPI, and I think we're going to see a hotter CPI. One of the things to watch very closely in the CPI is not only goods inflation, because that, again, it could just be a step up and, it's prolonged because of the uneven rollout of tariffs. That could dissipate over time. What we are watching very closely is the inequality out there. Affluent consumers are propping up service sector inflation, which accelerated last month. If that continues to accelerate, that's going to be very worrisome for the Fed, because that adds a new element to inflation that they thought would be an offset to inflation going forward. And so if we see a very hot inflation number, it's going to keep it to a quarter point, but there will be pushback and you could see dissents on both sides. If you see a cooler inflation number or not as bad as people expect, that could prompt the Fed to cut more aggressively and do a full 0.5%.
Okay, Diane Swunk, thank you. Let's break down what this jobs report means for stocks after the major averages fell from the record highs they set earlier today. Joining us now is Ross Mayfield. He is an investment strategist at Baird Private Wealth Management. Ross, it's great to have you on. Given what we've seen in the data, not only today, but this week, what we're seeing in the bond market, do stocks hovering right near record highs, does that make sense, or are we looking at maybe a near-term peak here?
No, I think it makes sense. I mean, look, it wasn't a perfect report today, but people are still working. I mean, the unemployment rate is still historically low. People are not being let go. Initial claims are down. And as you mentioned earlier, wage growth is still above inflation. So it's fueling consumer spending. We see consumer stocks, equal weight discretionary, right at all-time highs, which to me is a sign that maybe the narrative about the economy is not nearly as dire as it's being painted. And instead, the market is painting a picture of a consumer that's doing decently and looking forward to a couple of rate cuts this year as well.
It's pretty interesting trading activity under the hood here, because not only did you have tech, especially stuff that's tied to AI, taking it on the chin today, but you had some of the more cyclical sectors like energy and financial selling off as well. We don't see that dynamic a lot. What does it tell us?
Yeah, I think the message is that that investors are a little bit worried about the economy here. It's a bad news or bad data is bad news, not the other way around. The job market, as was mentioned earlier, has been the primary driver of the economy, of this bull market, the consumer spending coming out of the COVID-19 pandemic. So it's very, very important to keep the job market afloat. I think today, the rotation out of cyclicals a little bit, despite, again, being at all-time highs just earlier this week, is a sign that investors are slightly concerned about the labor market picture and the idea that the Fed is behind the curve, that 25 basis points in September might not be enough.
Ross, I'm concerned after a few earnings reports lately about what retail might be telling us about tariff costs bringing pain in Q4, maybe not to consumers. I mean, if discounting is really required during the holiday season to move inventory and keep consumers in the game, I mean, that could be a real margin twister, couldn't it?
Yeah, it could. I mean, look, we're watching the consumer stocks very closely to see what level of prices they're going to pass on to the consumer and what level they're going to try and eat. But at the highest of high levels, the S&P 500, aggregate margins are hovering near all-time highs. I mean, we're seeing, we got productivity data revised higher this week. I think we're starting to see a nascent productivity story. It might not be all AI. But companies are just very, very good at managing uncertainty. And so while the narrative is that, hey, we'd love to know the tariff picture, we'd love to know the rate picture, that level of certainty is just not going to be around the corner. In the meantime, companies are printing record earnings and margins are actually on the way up. So consumer stocks are again, trading at all-time highs. You're seeing things like home builders kick in. You're seeing things like retail, leisure, hospitality do well. So I actually think that the narrative is that the consumer picture is okay, and we'll probably have a decent to good holiday season if I had to place money on it.
All right. Ross Mayfield, thank you. Coming up, the CEO of Roblox joins us, the company unveiling new AI tools making it easier for gamers to make stuff on the platform. Will that be a big boost to earnings?
And Kenvue shares are sinking on a report that Health Secretary Kennedy plans to link Tylenol to autism. We have the full story coming up. Overtime's back in 2.
Welcome back to Overtime. A big move lower in shares of Kenvue today, down more than 9% on a report that Health Secretary Robert F. Kennedy Jr. is going to link Tylenol use in pregnancy to autism. Our Angelica Peebles joining us now with more on the story. Angelica.
Hey, John. Well, Secretary Kennedy is planning to link use of Tylenol in pregnancy to autism, and that's according to a report from the Wall Street Journal, according to people familiar with the matter. Now, Kennedy's been promising to pinpoint the cause of autism by September, that's of course this month, saying that certain interventions are clearly causing the developmental disorder, and that report will also reportedly link low levels of folate during pregnancy to autism. An HHS spokesperson, though, saying that until we release a final report, any claims about its contents are nothing more than speculation. And Kennedy in a statement saying that nothing is more important to us than the health and safety of people who use our products. We have continuously evaluated the science and continue to believe there's no causal link between acetaminophen use during pregnancy and autism. Now, whether there is a link between Tylenol use during pregnancy and autism has become a focus of research and lawsuits in recent years. And Morgan, as we both know, Tylenol is the only pain reliever considered safe by the FDA and the American College of Obstetricians and Gynecologists. And so we'll be watching this very closely to see what new findings we get from that HHS report later this month.
So in terms of the studies that have been done so far, what have those results yielded? And I guess perhaps just as importantly, when you hear the word link, how ambiguous is that term versus scientifically meaningful?
Yeah, so I was actually talking to a researcher a little bit earlier this afternoon who was saying that this has become a focus of research over the past 10 years or so, and some small studies have found an increased risk. And he and his team, they went and they looked at about 2.5 million children in Sweden. And when you adjusted for siblings, of course, because there's we think genetic factors at play. When you adjust for the siblings, they found no increased risk. And even when you didn't adjust it, there was only a modest increase between acetaminophen use, Tylenol use, and autism, ADHD, and other developmental disorders. And he was saying at best, he doesn't think there's a lot of evidence there to support the link. And at best, he thinks it's quite weak evidence. And really, all of these studies, they're all looking at the data, looking at the models, the observations, trying to see if there's, any correlation in the numbers. But you're not, when we talk about the scientific side of these things, we're not, giving someone Tylenol or not and seeing whether that directly causes something, because, of course, that wouldn't be ethical. And also, it's hard to do. You're not going to say, hey, you're pregnant, I'm going to give you this and see if your child has a developmental defect. So all of these studies are looking at the data of what we know and trying to parse some of those findings out.
Okay.
All right.
Angelica Peebles, thank you. Well, Roblox announcing new AI-driven tools that let users generate advanced interactive 3D objects for their games on the platform. The stock has had a blowout year. It's up 122% in 2025. But it has taken a pause in recent weeks. That's following a lawsuit regarding child safety. Our Steve Kovac is joined exclusively by Roblox CEO. Steve, take it away.
Thank you so much, Morgan. Dave Bazuki, a.k.a. Builderman in Roblox. Thank you so much for joining us off the heels of several announcements coming out of you guys. I think you just told me it was your biggest one ever as in terms of announcements, but I got to focus on artificial intelligence. So let's talk about this 4D AI product that you just announced, building on the 3D one that we talked about last time you were on with me. This idea that you can just tell the system what you want to create in Roblox, it creates it for you, you go out there and sell it. So far, how much, at least on the 3D version of this, I know this hasn't launched yet, but you've launched an early version of it. What kind of momentum or growth have you seen in there? And when are we going to get to the point where people like me who have no idea how to make a game in Roblox or at all or design anything can just go in there and tell Roblox, this is the experience I want to make?
Well, thank you for coming. Yeah. We're live at RDC. We're on a mission to have 10% of all gaming on the platform. We're surrounded by some of the most creative people in the world. And yeah, one of our big announcements today was on AI, not just for building experiences, but literally AI working inside of experiences. So for example, we saw the creator of Jailbreak using AI live on stage to allow anyone to create their own vehicle just by talking about it. We used to think we're going to create clothing in Roblox by cutting it with scissors and using a sewing machine. We're showing off today the technology where we would just talk about the clothing, and one of us might be a fashion designer. So we call this 4D. It's really generating things inside of a game that don't just look good, but actually function. So we're showing off building some mechs that look like a shark. We are showing off some watermelon guns and things like that. These are all things that can be created just by talking about them in Roblox.
And then sold, presumably.
Yeah. Well, it's really, we're taking a big visionary look of AI here and saying the traditional thing is, yes, we might use AI to build experiences, but imagine if every game or experience we were in, you could talk about things and have them magically appear. And so we've seen that in movies and sci-fi for a long time. We're literally showing it, and we made an announcement to ship our 4D generation by the end of this year.
Now let's talk about safety. This is you did have a new safety announcement this year. The age estimation. Basically, someone takes a selfie, they can see it. At the same time, there's the Louisiana Attorney General's lawsuit against you. There's also the Schlepp controversy, this sort of vigilante, so to speak, who is going after child predators, and you kicked him off your platform. As you guys continue to think about safety and go after this, why is it so easy for someone like a Schlepp to go in and play Chris Hansen and sort of find these things that you guys aren't finding?
Yeah, I want to highlight every single person we talk to, whether it's the general, whether it's people in DC, whatever. It's universal. Around the world, everyone wants kids to be safe on platforms like Roblox, so that's really important. What we announced this week on Wednesday is really what we feel is going to become the industry standard. We're going to do it first. We're doing it before any laws, before any legislation. And in addition to everything we already do, and what we already do is there is no image sharing on Roblox. We filter all the text. We monitor for critical harms. And we really actually focus on keeping people on Roblox rather than other platforms where bad things tend to happen. We added 2 new things that we announced this week. Number 1, we're going to use age estimation, including ID or AI-based selfie, to literally know everyone's age on our platform who's using any form of communication, including filtered communication. The second thing we announced is generally we'll use this technology, for example, to adjust, should a minor ever talk to an adult unless they know each other in real life. So not from the law, not from, anything else. It's really our vision of safety. We think every other social communication platform is going to look at this and say, this is the new standard.
So how should users be thinking about this, though? Because this is a very passionate issue among your user base in your community, and they find stuff too. And it was a big controversy when you kicked this guy off the platform.
Yeah, we want to highlight.
How should they be thinking about that?
Yeah, we want to highlight really, we have no tolerance for people who don't follow our policies. And so, for example, we don't allow people on our platform to impersonate other people or to do other things on our platform. And we're really consistent. But I would highlight, we've reached out to Schlepp, we've reached out to the general. We love their, feedback and input to how to scale our systems. We work at such a scale. We've shared that we had over 100 million DAUs. These things have to be solved from a major systemic issue.
And both to be clear, this is not just a Roblox issue.
And I would say what we're optimistic about is both with our vision of a new standard, really setting the groundwork for this. It is, as you mentioned, an industry-wide issue.
Right.
It's why we focus so much on keeping everyone on Roblox where they can share images or where all text is filtered, as opposed to maybe other platforms where some of these bad things happen.
Real quick, we're about to run out of time. Let's talk about the app stores. Apple's rules have since gotten loosened here in the United States. It's loosened up in the EU, giving companies like you a chance to monetize without giving Apple a rake. You haven't really taken advantage of that in a real way. Why not?
Well, I would say first, we're great partners with Apple, with Google, with Microsoft, with Sony, all of these partners. We have taken advantage of, actually, and we have seen consumers on our website, for example, get 25% more Robux when they buy there than when they buy on our platform. And we have seen that when consumers have this information, they do like to go and find Robux for the most economical things. So we've started rolling that out with our gift cards, with other things. We have seen, Apple recently have a little bit more flexibility, so I would say stay tuned on that.
Okay, that sounds good. We'll leave it there. Dave Baszucki, Builderman, CEO of Roblox, thanks so much for joining us. Thank you so much.
Thank you,
Morgan,
Steve.
I'll send it back over to you.
All right, and our thanks to you, Steve Kovac. Well, coming up, we mentioned the big moves in bonds today. Mike Santoli, he's going to be here with a look at what the drop in yields means for the stock market.
And as we head to break, check out shares of Figma, the lockup expiring today after its IPO in July, meaning insiders will be able to sell. The stock down more than 20% this week after its first earnings report as a public company. Stock closed a little bit better than flat. We'll be right back.
Welcome back to Overtime. As bonds rally and some hot parts of the equity market come off the boil, the market seems to be shifting priorities. Mike Santoli joins us here on set. He has a look at that. Mike.
Yes, yeah, and it's good to be here with you. I mean, for a market that really, on a net basis, only moved 1/3% today in the S&P, there is a lot of shifting going around, and this ferocious rally in treasuries has actually been helping one particular strategy, risk parity. There is an ETF for that, RPAR, which has had a great run, and it's kind of making pretty much a new high right here. So what they do is put leverage on top of bond holdings. It's an asset allocation thing. They own stocks and commodities as well. But the idea is to sort of to equalize the risk levels of various assets using leverage. And so when stocks and bonds are strong, in particular if bonds have a move higher in price, they're going to get the benefit of it. So that's something that's kind of coming out of the wilderness to a fair degree because bonds have obviously been a tough investment for a few years. The other part of it is, I guess, the sort of speculative high beta story stock trade that has backed away. So you got the meme type stocks, which is the Buzz ETF, and then the recent IPOs. So FPX is one of those IPO indexes. And now nothing really damaging has happened here, but it does reflect that the market has kind of slowed down. It's flattened out a little bit. It's maybe become a little bit more selective, and the retail ferment has maybe calmed somewhat as August has given way to September.
So not necessarily a bad thing, maybe a healthy thing here. I'm curious I want to talk to you about something that we haven't been talking about very much, and I think we should be, and that's credit spreads, especially after you saw so much issuance in the corporate bond market this week.
Credit spreads are very tight. Therefore, credit conditions are very generous for big companies, especially. And it's this unusual situation to some degree, which is we have absolute certainty the Fed's going to be cutting at a time when the credit markets are saying, give us all you got in terms of the new paper, and when volatility has been generally low and you have stocks at new highs and valuations rich and all the rest of it. So I think that's one of the reasons the market's been looking more or less on the bright side of this rate cutting cycle, because for now, and today's jobs number gave us a little bit of a pause on this, for now it's not because it's trying to support a faltering economy.
Beginning of the year, the conversation was good hard data, but negative sentiment.
That's right.
And which was going to correct to which direction. Now we seem to know the hard data has definitely gotten worse. So why are we not reacting to that?
Well, it's interesting. The labor market data certainly has gotten worse. There's kind of no way around that. And one reason we're not necessarily reacting adversely to that yet is that there are stories and explanations for why this might not be quite as bad as it looks on face value. Labor supply is going down. Obviously, the immigration story is part of it. And companies are kind of in this productivity mode. That being said, I think you also need the offset of things like this week, the ISM services being strong. It can't just be, and we're explaining away the negative numbers. So I don't know. I think the market has been able to lean on the AI theme and the idea that the tariff shock has worn off to some degree or is being absorbed and kind of figured out. Whether that's true or not, I think the market is leaning on that premise.
All right. Mike, we trapped you here in New Jersey now,
yes.
So you got to come back a little later in the show. Time now for the CNBC News Update with Kate Rogers. Kate.
Hi, John. A federal judge blocked the Trump administration from ending temporary protections for more than 1.1 million Venezuelans and Haitians to work and live in the United States. The judge's ruling today also means 600,000 Venezuelans whose protections either expired in April or were set to expire in September can stay and work in the U.S. CBS's Sunday show Face the Nation will stop editing its taped interviews after Homeland Security Secretary Kristi Noem accused the network of deceptively editing her appearance. CBS News said today the show will only broadcast live or unedited interviews, with exceptions only for national security or violations of broadcast standards. CBS attributed the policy to, quote, audience feedback. And on Sunday, Pope Leo will canonize an Italian teen as the first millennial saint. Carlo Acutis, who died of leukemia in 2006 at age 15, coded websites to spread the Catholic faith. Acutis was beatified in 2020, and last year, Pope Francis approved the second miracle needed in order to make him a saint. Back over to you, John.
Kate, thank you.
That's pretty cool.
Yeah. Coming up, we are looking at two of the day's biggest movers. Samsara moving higher on strong earnings and guidance. The company's CEO will join us.
And Lululemon struggles continuing. The stock has now lost more than half its value this year. We're going to get into the details behind the latest leg lower. That's coming up on Overtime.